Between executing on the portfolio simplification strategy, being able to redeploy that capital at a quicker clip than we anticipated at the beginning of the year, all of those things go into giving us a lot of comfort into raising that guidance and looking forward to the back half of the year.
I'm here today with John Moragne, CEO of Broadstone Net Lease. Can you discuss the broader macro trends you are focused on for the remainder of the year?
Sure. This will be a surprise to no one, but certainly in the interest rate environment. Federal Reserve policy, that has been the single biggest sort of disruptor for the real estate industry in the last, call it 18 months. Transaction volumes are at historic lows, particularly in our space, and our view has been that we need to see some certainty around the rate environment, not necessarily a certain rate, for us to start to see that environment come back, to start to see transaction volumes and the bid-ask spread narrow down a little bit. So we're of course watching, what the landing is on the other side of this, whether it's a soft landing or hard landing, but overall, biggest thing we're looking at is interest rate environment.
And you announced earnings ahead of expectations for the first quarter and raised guidance for the full year. Can you talk about what is giving you confidence to raise guidance in this market?
Sure. So for us, we're really proud and excited about the execution that we've seen so far this year. At the beginning of the year, we announced a healthcare portfolio simplification strategy. That has gone off really well so far. We've already executed on the first half of that. We have the next 25% or so that we've got some good visibility into. And maybe the more important piece is that we are redeploying at a clip that's a little bit faster than we're selling those assets. We've got about $400 million that we've already closed on this year in terms of new investments. Now that includes new properties as well as development fundings, including those things that we also have under control. So between executing on the portfolio simplification strategy, being able to redeploy that capital at a quicker clip than we anticipated at the beginning of the year, all of those things go into giving us a lot of comfort into raising that guidance and looking forward to the back half of the year.
And can you discuss what differentiates Broadstone from others in the net lease space and positions the company for long-term sustainable growth?
Hinted at it a little bit in the earlier question in terms of development fundings. The traditional net lease model involves in-place portfolio growth and then external growth on top of that. What we're trying to do as an industrial-focused but diversified net lease REIT is sort of add a couple of additional building blocks to that. So we have 2% weighted average bumps. That's our first building block. Strong portfolio. Then from there, because of the industrial focus, north of 50% of our ABR comes from industrial tenants. We believe we have an outsized ability to invest with our tenants from revenue-generating CapEx, and so we can build on that. This year, we already have $12 million or so of that either closed or under control. The next piece, as a result of the disruption in commercial real estate lending, is we're seeing a lot of opportunity in developments, build-to-suits, fundings of that nature. Again, with the industrial focus, we can do larger, chunkier development fundings. We can do build-to-suits. We have a $200 million build-to-suit with UNFI coming online at the end of Q3, beginning of Q4, which is really exciting for us, and that's something that we're looking to ladder in before we even get to that external growth. So you take a traditional business model that has 2 building blocks to it, and then when you add our 2 additional ones, 4 building blocks we think is a really differentiated strategy that should give people a lot of compelling reasons to invest with Broadstone Net Lease.